Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio. "26 years of CNBC TV 18.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, good morning.
Morning, folks. So, of course, we've had star-studded celebrations here at CNBC TV 18, celebrating our 26 years. But the Bulls, I guess, need a little more, reason to celebrate because they're getting stuck. I wasn't here for the last 2 days, but I did notice that every time...
A little birdie tells me that you were having celebrations of your own.
Very, low-key, let me say. Low-key, nothing compared to what we had here. But I was, of course, watching. And, fantastic 26 years. But I'm saying the Bulls need a little more to celebrate. They're getting torpedoed every time they come to this 26,000 mark. So, Nigel, what's it going to be today?
Surbi, I've known you long enough. When you go for your anniversary to Goa, low-key and looking at the markets, nothing of that sort. Wishing you all the best and good to have you back. But, yeah, the markets need a bit of a booster shot.
Yeah, I mean, yesterday we got not a booster shot, but maybe from the lows things picked up a little bit. But the sentiment still is quite poor. There's no doubt about it. So let's just actually pick it up from exactly there, right? Yesterday, the start at 9:15 was as bad as day before yesterday. Day before yesterday was terrible. I mean, just a very, very brutal, almost capitulation-style selling all the way into 3:30 by close. Yesterday, it started like that. Down at one point 200 points, and the market advanced declines from six down to 1 up, etc. By close, it was not so bad. It was better. Market breadth was positive, 2:1 by close. So it's completely flipped. But I must say that if you just look at the kind of stocks which went up and constitute the top gainers list, and we put that list out yesterday. These are names which you don't encounter, talk about much in terms of institutional ownership, etc. So it's a bit of this and that. So we'll have to see. Basically, the focus essentially is on when things will start to stabilize. I mean, recovery and big rallies, etc. We can, even if it is a little delayed, it is okay. But you need a bit of stability first after the recent episode of brutal selling we've seen. The big cue tonight is going to be the FOMC. So the decision is tonight, and a hawkish 25 basis point cut is expected. Hawkish is what the market is expecting, right? And what do you mean by hawkish? Basically 25 and done for the next few meetings is what the expectation is. Now, on that point, Trump gave an interview to Politico, and he basically said a quick reduction of borrowing costs would be a litmus test for his choice to head the Fed. So he's making it very clear. While the market is saying 25 and done, but Trump is saying, well, the next guy who gets the job, and whether he gets a job will be his commitment to reduce borrowing costs significantly and a lot, quickly. And again, to sort of finish that thread, next potential Fed chair, Kevin Hassett, and Trump has publicly singled him out and signaled to the market that maybe he's the chosen one. We'll see. He said last night, that there's plenty of room to ease by more than 25 basis points. But it's not one man's decision, as we've always said. It's a full committee. In terms of data, which was not bad at all, October job openings climbed to their highest since May. The economy and the labor market, etc., throwing up mixed signals, and maybe a month more and we'll have better idea because it was a shutdown, etc. Maybe some impact of that. 10-year, in terms of macro markets and whether stock markets left off, absolutely unchanged. S&P, Nasdaq, 10-year yield, 2 basis point change. Oil prices were down about 1%. We're at about 62. Oil prices, by the way, have sold off about almost 4% very quickly in the last 3-4 trading sessions now. And I just want to put this out, which is interesting. No real immediate market impact, right? The Financial Times is reporting that Chinese regulators are considering limiting access to NVIDIA's, H200 chips. Remember, these are NVIDIA's highest capacity, the most advanced chips. And look at the flex here. Trump essentially is the one who stopped NVIDIA from selling these chips to China. Then he relented a little bit, saying, well, maybe you can sell, but we need a cut out of this, these sales to China. And now China is essentially saying, but this is Financial Times story, China is now saying that, well, we don't want these chips. They are now saying, well, they are gatekeeping and saying, Chinese firms, we will limit access to these chips. So, there's a lot to unpack there in that sense. Just to tie in the levels here, as I said, a bit of a recovery yesterday, 100-point bounce. Market sold off 200, recovered 100. 20-day moving average is 26,030. So we're still under it on the Nifty. So that's the first kind of level if there is some recovery which continues. Nifty Bank managed to, just about managed to creep up above the 20-day moving average, and we ended slightly above it. So the 20-day is 59,149. That becomes the level. So 20-day for both the Nifty and the Nifty Bank, one slightly below, one slightly above, is the pivotal kind of marking point to note. I think the GIFT Nifty gives you a quick sense of how we're likely to open, and we'll pick it up from there. 50, 55 points lower is what you have. Nigel has walked across with the F&O stats and positioning. Nigel, over to you.
Well, yesterday was the weekly expiry, and there were a few positive takeaways after a very, very weak Monday. So let's quickly run you through a few of them. The rupee, well, that showed some signs of stability, which is obviously a good sign. We pulled back, we ended below that 90-odd mark. Next up, the advanced decline ratio. It was the best that we saw since the 26th of November, which essentially means the number of stocks that were advancing were more than the number of stocks that are declining. You like that. The Nifty Bank, it breached the 20 DMA, but by the end of the trading session, it managed to close above the 20 DMA. And finally, the Nifty ended lower, but the India VIX is well cooled down, which sometimes is a bit of a positive sign. So those are the four positives from yesterday's trading session. What did the FIs do on the future side of things? Well, they added shorts on the index. Mild shorts out there, some unwinding of long positioning. But on the stock side, on stock futures, as you can see, they covered some shorts. And because of that, we did see individual stocks that did bounce up. Case in point could be Keynes Technologies. The stock, remember, has come out of the F&O ban. I told you about this at 10:30 a.m. itself yesterday, that was the probability. And towards the end of trade, it was almost confirmed that it's going to come out of the F&O ban. The short seems to have got stuck on the wrong side out there. So there were individual stocks that did come in for some covering out there. Moving to the clients, how are they positioned on the index itself? So you look at the clients, they are net long, 92,000 contracts on the long side, and in percentage terms as well. While the FIs, they are net short, and now the short positioning has moved in percentage terms to the highest we've seen in nearly around 2 months or thereabouts at around 89%. That combination normally is not such bad news. You want some shorts in the system? Well, your wish has been granted. Clients on the flip side, for the second day running, there is some unwinding of long positions, and we have been seeing that. They are still long on stock futures, but there is some unwinding that we're seeing out there. The PCR yesterday moved to around 0.6, and from those levels, you normally see a bounce. By the end of the trading session, it aligned itself and was closer to around 0.78 or thereabouts. So just to pull up a couple of strikes on the screen, the call writers, they still believe that 26,100 mark, they have got it covered because of aggressive writing that you've seen, in the last few trading sessions. Moving to the levels then, the broad range is 25,700 to around 26,100. That's the broad range that you're looking at. And if you're looking at, data points, then the 20 DMA comes in at around 26,030. And yesterday's low, that's going to be important. The last few trading sessions, we have been making lower lows, so you don't want that to happen. So that's the reference points on the downside. 25,700 now becomes an extremely important point. The stock that I'll be looking at is Interglobe Aviation, because post-market hours, you got news that the Ministry of Civil Aviation, they announced a 10% curtailment in Indigo flights. By the time we close up, we're working with a number closer to around 5%. So that's a stock that's corrected 20%. I'll keep an eye out on this particular name. And also, if in case there's a penalty that will have to be announced in the time to come. But that's a stock you'll want to keep on your radar.
Yeah, absolutely. And I remember the day that the whole Indigo fiasco broke out. That's the first question we asked the analyst, whether this is going to develop into something more severe, whether Indigo is at the risk of losing some of its slots. And that's exactly what we are grappling with today, as their capacity has been cut by 10%. So Indigo remains a stock in focus. By the way, don't lose sight of all the primary market action. Never a dull day, right, in IPO land. And today, while of course we'll start off by looking at Meesho's listing today, and what a bumper subscription this issue got, almost 80 times. And the anticipation is that it's going to be a good listing. It's not the only one. I mean, there are, it's got peers, Equus, Vidya Wires. These are the ones that are listing today. There are more IPOs opening. Park MediWorld, we'll be speaking with Park MediWorld actually in just about half an hour from now. There's Nephrocare Health opening out. And then there are some closing today. So Wakefit Solutions is closing today, Wakefit Innovations, and Corona Remedies. Never a dull day in the IPO market. The only caveat, by the way, is that if you thought December will be the lucky month that will reduce the amount of FII selling, that's not what's happened, because FIIs are going back to selling in a big way, the highest sales since September. So watch for that. That's been a bit of a area of concern. Maybe once they go on their Christmas holiday break, the FPI selling stops. Anyway, before we introduce our first guest on the show, quick glance on Asian screens, and things are pretty mixed out there in Asia. We've got inflation numbers out of China, and that's suggesting that deflation at the producer price level, that is continuing, while CPI, consumer inflation has been spiking in China. So keep a watch on that. Mixed picture across most of the Asian equity markets right now. Let's pull up the implied open and the GIFT Nifty, see what that is suggesting in terms of how might we start. Can the bulls continue to claw their way back? 54 points lower, so cautious start is what is expected for now.